Effigies burned, cries of protest, thousands in yellow jackets on a strike for a week. The Delhi National Capital Region turned into a theatre of conflict between Blinkit and its delivery partners over a new rate card. The Zomato-owned company cut payout to 15 rupees per delivery from 25 rupees earlier. The revised pay structure has a distance-based variable component, which the company says, and I quote, is fair. The riders believe it's not. They fear it will cut their monthly earnings in half. The standoff temporarily shut half of Blinkit's 200 dark stores in the region. So be it, said the quick commerce company, unrelenting in its stance. For a week, the Blinkit strike smoldered under the hot summer sun, but has since cooled, with the majority of delivery partners returning to work. All's well, declared Zomato in a stock exchange filing, wiping the disruption aside, saying it caused no material impact on the company's financial performance, a hit of less than 1% in revenue. However, a lot of experts we spoke to believe that the genesis of the problem lies in the business model of quick commerce itself, which promises consumers instant gratification while delaying profitability, as most players in the sector continue to burn cash and report losses. Which brings us to the question that we're asking today. What is the economic and reality of running a hyper-local delivery business? What are the biggest cost centers? What will it take to create a business model that's a win-win for all stakeholders, turning this potentially $5 billion market from whimsical into sustainable? Hello and welcome to Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shereen Bhan. Well, joining me now are our guests for the show, Aadit Palicha, the co-founder and CEO of Zepto, a quick grocery delivery app. We're also joined by Abhishek Bansal, the co-founder and CEO of logistics company Shadowfax, Shaik Salauddin, the National General Secretary of the Indian Federation of App-Based Transport Workers, and Shantanu, Deshpande, the CEO of Bombay Shaving Company, with us on the program. Gentlemen, thanks very much for joining us here on the show. शेख जी, आपसे शुरुआत करना चाहूंगी. एक हफ्ते की स्ट्राइक थी, अब स्ट्राइक खत्म हो चुकी है. कई डिलीवरी पार्टनर्स का ये मानना है कि जो अब नया रेट कार्ड है वो अनफेयर है, वो उनके खिलाफ है. आप बताइए, सबसे ज्यादा आपको किस बात की परेशानी है?
देखिए, पहली बात मैं आपको बोलना चाह रहा हूँ कि स्ट्राइक खत्म पूरे से नहीं हुई, स्ट्राइक अभी बरकरार है. ठीक है, तो और आपको ये भी क्लियर करना चाह रहा हूँ, जैसा ये रेट कार्ड का मामला चल रहा, 2022 के अंदर 50 रुपए था, उसको बाद में हल्का 25 रुपए किया गया, उसके बाद में आज 15 से 10 रुपए के बीच में दिया जा रहा. ये इसके वजह से डेली लाइफ पे जो डिलीवरी बॉय है, जो डिलीवरी वर्कर है, जो सुबह से लेकर शाम तक 12-12 घंटे जो काम करते हैं, उनके ऊपर बहुत ही उनकी फैमिली के ऊपर इफेक्टेबल है. इसको समझना चाहिए. हम अभी मल्टीपल टाइम्स वही आपके द्वारा एज ए मीडिया द्वारा भी हम लोग बोल रहे, ब्लिंकिट मैनेजमेंट से भी हम रिक्वेस्ट कर रहे हैं, मगर आज के हालात जो है वो बहुत बुरे हैं. आप देख रहे होंगे डिलीवरी वर्कर्स को हर चीज बढ़े जा रही है. डीजल का रेट, पेट्रोल का रेट और बेसिक नीडली जो भी घर के जरूरतमंद चीज है वो सारे बढ़ते जा रहे हैं, मगर यहाँ पे डिलीवरी बॉय की अर्निंग कम हो रही और उसका लाइवलीहुड पे इफेक्ट गिर रहा, वो बहुत बुरा.
तो शेख जी, आप कह रहे हैं कि अर्निंग्स पे काफी भारी प्रभाव पड़ा है और आप कह रहे हैं कि स्ट्राइक खत्म नहीं हुई है, लेकिन कंपनी के हिसाब से तो स्ट्राइक खत्म हो चुकी है और वापस आ गए हैं सब काम पे.
नहीं मैडम, वो थर्ड पार्टी उनको ज्यादा हायर करके कंपनीज ने उनको हायर करके रखा, काम चला रहे. तो मैं उस चीज में ज्यादा नहीं जाना चाह रहा हूँ. आज के तारीख में भी आज अगर जब देखे होंगे, सुबह गुड़गांव के अंदर, दिल्ली एनसीआर के अंदर अभी भी हमारे साथी बहुत सारे लोग आज ज्वाइन नहीं हुए वर्क के अंदर. मगर कल का जो बिहेवियर था कंपनीज का, जो बिग बास्केट कंपनी का जो बाउंसर्स, 100 के ऊपर बाउंसर्स लगाए हर जगह, हर उनके हब्स के ऊपर जो पुलिस का पहरा लगा के जो करे और उनको आईडीज ब्लॉक करते बल्कि जो धमकी दिए, उसके वजह से थोड़े लोग जो है वो खौफ में आके उनकी रोजी रोटी के, क्योंकि वो बेरोजगार है मैडम, उसको रोजगार इसके सिवा दूसरा नहीं है चारा, क्योंकि ये चारा बना दिए, तो उसके लिए पाप बेचारा थोड़े मजबूरन लोग जाके जुड़ गए, क्योंकि वो बाउंसर्स को देख के डर के, पुलिस वाले को देख के एकदम थ्रेट में आ गए. उन लोग क्या कर सके, उनके सामने दूसरा चारा ही नहीं है. मगर पूरे लोग जैन नहीं हुए.
तो अब मैं आपसे वापस आऊंगी. ठीक है, आप कह रहे हैं पूरे लोग ज्वाइन नहीं हुए हैं और मुद्दा यही है कि आप कह रहे हैं कि जिस प्रकार से रेट कार्ड का चेंज हुआ है, वो जो अर्निंग्स अब डिलीवरी पार्टनर्स की है, उससे इन्फ्लेशन और फ्यूल कॉस्ट वगैरह को मद्देनजर रखते हुए आप कह रहे हैं कि उससे काम नहीं बन पाएगा. Adit, let me come to you now, because I think at the heart of the matter really comes down to the economics of the quick commerce business, and I think this is a debate that you and I have had previously as well, and it is one that that we intend to get back into. Now, you know, the reported numbers for Zomato, those are the public numbers. You don't share your numbers, so we don't have access to those. X of Blinkit, Zomato says that it is EBITDA positive. Including Blinkit, there is a loss. Since the acquisition of Blinkit, there's a loss of over 400 crore rupees that Zomato is bearing. Now, many have questioned the unit economics of the quick commerce model. You believe it works. You believe it's doable. Respond to what we've heard here from Shaik, what we have heard from others saying that, look, a business model needs to be sustainable and quick commerce in India is not.
Thanks a ton, Shereen, and I appreciate you having me here and the opportunity to speak on this platform. So look, I don't believe quick commerce's unit economics work. I know quick commerce's unit economics work. I mean, at this point, it's a function of the data. I mean, to give you a sense of where we stand right now, you know, we're in a position where, you know, we've got hundreds of dark stores across the country at this point, and about 65% of them are fully cash flow positive, including everything from rent, utilities, manpower expenses, delivery cost, wastage, your back-end sourcing cost, your customer support agent and wastage, fully loaded, right? And not only have they turned fully cash flow positive, they're turning profitable faster than supermarkets turn profitable. We're seeing a Zepto dark store take 13 to 14 months to turn fully loaded cash flow positive versus a offline supermarket, which is a well-established business model, takes 18 to 24 months. So this model is new, right? We don't have a 5-year ROIC yet, but forget about proving the business model. We're turning our stores profitable faster than supermarkets. We believe we'll probably have a longer and better, a faster path to pay back and a better ROIC in the long run. So I don't think it's a function of philosophy or debate. I think I've got access to data and on numbers day to day. So yeah.
Unfortunately, we don't have access to it, Adit, so I've got to take your word for it. But, help us understand. You're saying that 65% of your dark stores are today cash flow positive. What's working? If you can break it up for us in terms of delivery charges, in terms of product margin, in terms of what you're being able to do with cost efficiencies, etc. What's working? How are you being able to deliver on unit economics?
Look, it's a phenomenal question. And, by the way, I'd be happy to catch up with you for coffee one day and show you our P&L. But in terms of the, what actually works with this business, see, this business is, fundamentally a function of operating discipline, right? It's like asking what's the difference between a, D-Mart, which is a highly profitable, grocery retail company, and every other grocery retailer other than D-Mart, which is nowhere near the profitability. And a lot of people follow the same model of, budget retail, budget grocery, but they still don't have anywhere near the profitability metrics that D-Mart has, and it fundamentally boils down to execution. So to answer your question, there are no silver bullets, right? It's everything from a better sales mix towards fresher products that lead to higher margins, to a higher utilization per square foot that takes our rent as a percentage of sales to 90 basis points, all the way to the amount of, the productivity metrics of our delivery partners, the supply planning and the efficiency we have, and even metrics like how efficient we are with our packaging, how productive are our customer support agents. It's basis point by basis point execution. So at its core, it's like asking what's the difference between D-Mart and everybody else in budget grocery. It's just execution.
Okay, it does boil down to execution. If I may ask, Adit, what is the kind of margin that you enjoy today?
So, you're putting me on the spot on live television, which is great. I think to give you a sense,
you offered to take me out for coffee and show me your P&L. So I'm asking you a fairly innocuous question here.
Yeah. No, look, it's a good question without going into specifics. I think we're operating today at a post-discount gross margin of 20 to 25%, largely on the back of just a higher penetration of fresh fruits and vegetables and fresh products that are naturally higher margin than your FMCG products. And there's a lot that we've done to drive that, but yeah, if that answers your question.
Okay, 20 to 25%, if that really is the margin that you claim that you are being able to deliver. I mean, this would be music to the ears of many across this business. But Abhishek, I want to come to you now and understand from your point of view what you believe are the opportunities, but more importantly, what you believe are the levers. Because I think once again, this model is coming under scrutiny and in question on account of what we're seeing happen with the delivery partners and the standoff currently at Blinkit. But it's not a new phenomena. And the question then is that, do you have enough levers that you can leverage to be able to ensure sustainability and viability in the long term?
Question, and continuing from probably where Aadit ended, I think it is purely a matter of operating discipline. If you talk about retail in this country is a very, very tough business. And as you can see, like there'll be like probably 90% of the retailers who have basically started a business properly, but they haven't done well. If you look at the business, I think it is phenomenal. Like it is extremely dependent on the kind of products that you're selling. Where are you selling? What kind of choices are you making? If you probably go all out over there across all geographies, probably this business does not make sense. But if you're being very, very selective in terms of choosing where your customers are, choosing the right kind of customers, and building a brand for those sort of customers. Today at Shadowfax, we are in a position where probably we are working with every quick commerce company in this country. And we are seeing that every company is operating in a very different sort of a modus operandi. I mean, there are companies like Zepto which probably are focusing a lot on fresh, which is supremely high on margins. But there'll be multiple other companies who might actually be selling commodities and going after the GMV sales. Okay, and in those kind of things, it's actually very difficult to make some of these margin-related elements. But I think when it comes to logistics, logistics is a very, again, there are certain elements around efficiency, productivity, which matter a lot to the unit economics. But also what matters is a lot of softer element. Okay, how are you locating your dark stores? Are you serving customers which are far away from your dark stores? Okay, are you keeping your people happy over there? How is your demand distribution throughout the day? How's your forecasting engines working so that the people who are working with you have a very reliable way of making money? Typically, what we have seen is that, again, and there's a metric that we measure today across our network. What is the satisfaction level of delivery partners across delivery companies? And what we have seen is, again, different companies have very, very different kind of happiness cycles. And it all relates in some way to the operating discipline that they have. But that also plays a huge role in the unit economics. Because the happier the people are with working in a certain place, I think the more stable the unit economics can be in the long run.
No, absolutely. And I think you make an important point there that, this perhaps is not a sort of spray model. You have to be selective in the markets and the customers that you're choosing to address. And Shantanu, that's what I want to address with you, because you've been tweeting or writing on LinkedIn about this issue as well. And I think it once again brings into focus the issue of how large really is this addressable market. I mean, all kinds of numbers are bandied about and thrown about, but the actual paying capacity, the actual paying customer, the difference, the divergence between the addressable market or what is projected and forecast as the addressable market and the paying capacity, that's where the problem seems to lie, the divergence therein.
I completely agree with you. I think, so first of all, as Bombay Shaving Company, Zepto, Instamart, and Blinkit are important. They account for almost 10% of our revenues, right? So we see growth happening, we see customer acquisition happening, we see them as viable, large-scale opportunities. As a consumer also, for me, I use all three. And I genuinely believe that it is a habit-creating product. Now, retail, as Aditya and Abhishek have rightly said, are execution and discipline-driven kind of industries. DMart has obviously done something phenomenally well, operates at a very different level, and so on. I genuinely believe that because of a large amount of investment, private investment in companies, there is a certain amount of habit creation in consumers around discounts and what you feel should happen. And in consumption economies, if you look at India, if you look at middle class India, okay, I don't think the market is as small as we think. India is premiumizing.
Yeah.
Red Bull is a 2,500 crore brand. It's a 100 rupees single product SKU, single SKU business. They're paying 100 rupees energy drink, 2,500 crore of sales. I think it's that all. So we are not in any way a poor country. So middle class is a big one, and it's getting bigger. The issue is we tend to extract value from people who we presume to be poorer than us. So we will extract value from the ironing guy. We will extract value from the maids. We will extract value from the sabzi wala, where we'll take dhania, mirch, etc. But we'll go to PVR, the same middle class family will go to PVR and spend $600 on popcorn. So the consumer, in my view, also is the belief is that consumer cannot spend and all of that. I genuinely feel that's a highly exaggerated argument. I genuinely believe consumers, as the country progresses up the economic cycle, consumption patterns have to go up. We have to figuring out where to extract value from people richer than us or poorer than us.
No, fair point, Shantanu. But my point is that the consumer that is willing to pay for convenience is paying the delivery charge, is paying the handling charge today. But there are consumers who may want the convenience but don't want to pay for it at this point in time. And that transition, I don't know when that's likely to happen. And that's the question. So, and I guess that's where the forecasts and reality are diverging.
No, I agree. I think
Aadit, I'll come to you in a second. Yeah, Shantanu.
I think we have put bad habits into consumers over the last 10 years. India is the only country where there is 50% cash on delivery. There is no reason with UPI as well spread out for there to be 50% cash on delivery. Of that 50%, 10% are personal care and food products that are opened, used and returned, and the consumer will tell the delivery boy, leke jao, mere ko nahi chahiye. These are not good habits. These habits are by 5 to 10% of consumers bring businesses to their knees and spoil economics across the board. They're not required. They're very penny wise, pound foolish. So I feel that transition has to happen. It might take some time. Might take some time to unlearn.
And I think that's what we're seeing happen to some extent, even as far as this delivery partner issue is concerned, in the way the delivery partners were being onboarded and being paid, and now you're changing the rules of the game on them. And I think that's one of the issues that we're seeing play out today. But Aadit, you wanted to come back to the point that Shantanu was making and respond to Shantanu's point that, it's a lot of you guys that instilled bad behavior. And now as you chase unit economics and the path to profitability, a lot of those bad habits are being unbound.
Shereen, I think you're trying to, get a pretty exciting dialogue. But I actually agree with a lot of what Shantanu was saying. And I'm not sure if it's noticeable in my face, but I wasn't here for most of that process of heavy discounting. To give you a sense, Zepto's discount right now is 30 basis points. You mentioned 50% cash on delivery. It's 22% cash on delivery for us. And more importantly, I mean, to give you a sense, I think on the narrative that the forecasts on how big this opportunity can be and what's actually playing out in reality, I mean, to give you a sense, the reason why we are sitting here discussing this model is because, for example, Zepto became the fastest growing consumer internet company in Indian history. We went from 0 to thousands of crores in annual sales in 18 months. We're an 18-month-old company. And yeah, today we're doing a couple hundred crores a month, thousands of crores annually in sales. More importantly, I mean, to give you a sense, I think there's a little bit of a stigma that's been pushed on this model, right? In reality, I mean, getting the contribution margin positive, turning dark stores profitable faster than supermarkets. When you actually look at the depth, the story is very different. What's interesting to me is that there are companies out there in technology that have been unprofitable for 7, 10, 15 years. This model is 18 months old and everybody's already written it off. And I think it's just mainly sort of a stigma. I think the inherent assumption is, will people pay for convenience? That inherent assumption assumes that the delivery cost is higher with this model than in other models. I mean, to give you a sense, and Abhishek knows as well, we've got, probably the lowest hyperlocal delivery cost in the country right now, lower than, food delivery, lower than hyperlocal e-commerce, other formats, lower than, let's say, vertical hyperlocal e-commerce, like a meat delivery play. So the inherent assumption that faster delivery means, more expensive cost structures and by virtue higher delivery fees is just that it's an assumption.
No, and that's a fair point that you make. That and I truly believe that I'm the last person to write premature obituaries or obituaries, till you actually have to. So I take what you're saying on board. But Abhishek, let's address this issue, because I think Aadit is right in pointing out that the questions that people have are based on the assumption that the cost structure is going to be significantly higher if you're operating a quick commerce business like Zepto. Now, is Zepto the exception? Is Aadit the exception, or are we seeing legitimate business models where, there is viability and sustainability? You're working with just about everybody in the business at this point in time. What are the good habits? What are the bad habits?
I'll actually share some data points with you, which will be pretty helpful to understand like what exactly is going on. And to some extent, I agree with Adit. I think it's a stigma. Suddenly, people have started writing off a quick commerce as if nothing has happened. I think we saw a very similar trend in 2016, 2017 when we were trying to write off some of the food delivery platforms in a very similar manner because they were, again, at that kind of a scale, they were not able to demonstrate clear profitability. But let me throw some data points at you. The typical cost of last mile delivery in a quick commerce kind of an ecosystem is about 30 to 35% lower than delivering food. Okay. One of the major reasons for that happening is basically the last mile delivery distance in a dark store sort of a model is significantly lower. There is no first mile distance. So typically as a delivery partner, I just have to go somewhere. I know where I have to go. It's a regular place where I will go. I will pick up the order. I will deliver it to the end customers. What we have also seen, and this is quite surprising versus what we had also anticipated probably a year back, delivery partners actually love quick commerce. There is a reason for that. They don't have to travel huge distances. They typically don't have to cross highways, cross flyovers while delivering to the customers because some of these dark stores are actually very closely located to the customer. Okay, they get delivery demand throughout the day. Typically in food delivery, you will only have very select number of hours where you will actually get peak demand. But if you look at quick commerce, the demand is actually spread throughout the particular day. And as a delivery partner, I can at times actually use even a bicycle. Okay, from what I understand, in this space, there's a huge penetration in terms of delivery partners actually using cycles and not even using a motorbike or probably even looking for an EV. I think the kind of value unlock that is happening, especially on the delivery partner side, the kind of satisfaction that we are seeing is definitely higher than what we are at least seen in food delivery, which is something which I would say at least 3 times as bigger as the entire quick commerce delivery market. And some of these things actually matter a lot in the long term. Okay, if your attrition rates are lower, if your partner satisfaction is higher, if your demand is spread across throughout the day, you can better manage your utilization. And again, eventually it all boils down to operating discipline. If your discipline is there, if you know what you're selling, how you're selling, if you're making margin on every transaction within your dark store, I think from a logistics standpoint, we think it's going to be a game changer, and we don't think that logistics cost is going to be a bottleneck to this model in the long term.
Okay, you don't believe that will be the case. शेख जी, आप आदित्य की बात सुन रहे थे, शांतनु की बात सुन रहे थे और अभिषेक की बात भी सुन रहे थे। और अभिषेक जैसे कह रहे थे कि ये फूड एग्रीगेटर मॉडल से बेहतर है क्योंकि पूरे दिन का डिमांड चलता है, ज्यादा दूरी नहीं आपको जाना पड़ता, 2 किलोमीटर का रेडियस मान के चलिए वो होता है। तो आप क्या समझते हैं कि लॉन्ग रन में बेहतर मॉडल है ये? आप अगर थोड़ा बहुत अभी जो आपको वेरिएबल कॉस्ट भी दिया जा रहा है, डिस्टेंस ज्यादा होने पे और पैसे आपको दिए जाएंगे, तो आपको लग रहा है कि ये ट्रांजिशन हो पाएगा? आप कैसे देख रहे हैं इस मामले को?
देखिए, मैं पूरी बात सुन रहा था दिनों से भी। तो देखिए, जो 10 मिनट के डिलीवरी की बात भी है, इसके अंदर देखो 2 किलोमीटर या 1.5 किलोमीटर का रेडिएशन जो है, उसके अंदर कितने ऑर्डर कर सकता पर डिलीवरी बॉय, बताइए। मैं ग्राउंड की रियलिटी की बात कर रहा हूँ। एज ए डिलीवरी बॉयज के मैं हर रोज, इवन कल भी बात कर चुका हूँ, सुबह भी बात कर चुका हूँ। मैं नजदीक से देख रहा हूँ उनके प्रॉब्लम्स को। ऐसे नहीं है मैं कोई व्हाइट कॉलर लीडर। हर रोज 10 से 15 डिलीवरी होंगे, ठीक है। 10 मिनट के डिलीवरी अगर जब टाइम पे नहीं पहुंचाने पे उसको 300 रुपए की पेनाल्टी भी है। अगर जब वो पैकिंग के अंदर कुछ प्रोडक्ट का भी प्रॉब्लम आ गया तो वो भी डिलीवरी बॉय को उसके अंदर भुगतान करना पड़ेगा, नुकसान उठाना पड़ेगा। और 10 मिनट का जो डिलीवरी दिया जा रहा, वो डिलीवरी के टाइम में अगर जब नहीं दे सक रहे तो वो भी आईडी का ब्लॉक है, रेटिंग का प्रॉब्लम है, कस्टमर का प्रॉब्लम है। इतना ही नहीं, आप देखिए 10 मिनट के अंदर का भी प्रॉब्लम, एक्सीडेंट का प्रॉब्लम कितना हो रहा। इतना ही नहीं, मैं ये बताना चाह रहा हूँ, सिंपल पेमेंट, मेरे को एक मिनिमम वेज पे लेके आओ ना, एक बेस पे लेके आओ। चलो आप बोले तो मैं मान लिया 2 किलोमीटर के रेंज के अंदर हम कितने भी राइड, कितने 20 राइड 10 राइड जो भी है करके उसको मिनिमम वेज के अंदर लेके आओ। क्यों नहीं लेके आ सकते? जब 50 राइड, जब 50 रुपए थे, जब 25,000 रुपए जब नहीं कमा सक रहा, अब जब 25 रुपए हुए थे जब 15,000 रुपए नहीं कमा पा रहा, अब जो है 12 से 15 रुपए के बीच में जो है 8 से 10 हजार रुपए कमा सकता डिलीवरी बॉय, उससे बढ़ के नहीं कमा सकता। आपने तो वादा क्या किया था स्टार्टिंग में, 30,000, 35,000, 40,000 तक आप कमा सकते यहाँ पे प्लेटफॉर्म पे बता के। बड़े बड़े होर्डिंग्स लगाए थे, आप एड्स दिए थे, मगर आज क्या हो रहा, जब एक्सीडेंट हो रहा उसको इंश्योरेंस क्लेम नहीं मिल रहा, उसको थर्ड पार्टी इंश्योरेंस है, वो थर्ड पार्टी इंश्योरेंस रेस्पॉन्ड तक नहीं होती मैडम। हर स्टोर में हर वीक में एक एक्सीडेंट दिखा जाता, ये ग्राउंड की रियलिटी है। और डिलीवरी बॉय क्या चाह रहा, वो मॉडल को आप अप्लाई करो ना। कस्टमर खुद नहीं चाह रहे, कस्टमर खुद चाह रहे कि डिलीवरी बॉय खुद सीख रहे, मैं डिलीवरी वर्कर कहीं पे भी खुश नहीं है बीते हुए, चाहे वो फूड डिलीवरी के अंदर हो, चाहे वो ग्रोसरी डिलीवरी के अंदर हो। आप देखिए बीते हुए दिन से कितना डिलीवरी बॉय की आमदनी घट रही, आमदनी बढ़ने की जगह आमदनी लगातार घटते जा रही। आप इसको समझने की कोशिश करिए। अभी तो पहली बार जैसा देखिए 3 दिन से लगातार आप देख सकते हैं, 3 दिन से पूरा वर्कलोड पड़ के पूरा मूवमेंट डाउन है, ठीक है। उस टाइम पे ब्लिंकिट ने अपने ऐप में खुद कर दिया कि हमारे पास डिलीवरी वर्कर्स का नहीं है, उसके वजह से हम सर्विस रोक दिए। फिर थोड़े जगह जहां जहां थर्ड पार्टी डिलीवरी के एक्सेस है वहां पे उन लोग लेके काम करे। मगर आज भी मैं आपको स्क्रीनशॉट प्रूव कर सकता हूं कि आज भी जो है ब्लिंकिट का क्या वादा था। मगर मैं यही कहना चाह रहा हूँ मैडम, जो बंदा, जो डिलीवरी बॉय जो रात दिन खून पसीना मेहनत टपका के अपनी कंपनी को ग्रो कर रहा, अपनी कंपनी को शोहरत बढ़ा रहा, मगर उस डिलीवरी बॉय के बारे में नहीं सोचना, उसकी लाइफ के बारे में नहीं सोचना, उसका लाइवलीहुड के बारे में नहीं सोचना, वो बहुत हमारे पे हो रहे ना तकलीफ की बात है। और बाउंसर्स लगा के थ्रेटिंग करना, पुलिस वालों से थ्रेटिंग कराना, ये मैं समझता हूँ कि कोई कंपनी को ये शोभा नहीं दे सकती। मगर एक लाइन बोल के मैं खत्म करना चाहूंगा।
मैं आपकी बात समझ रही हूँ।
हर कंपनी में मैडम एक ही लाइन, हर कंपनी के अंदर जो ड्राइवर हो, डिलीवरी बॉय हो, उनका खून पसीना है, उसको आप समझने की कोशिश करिए। उस खून पसीने की मेहनत से ही आज वो कंपनी रंग लाई, आप उसको समझने की कोशिश करिए। अगर जब वो डिलीवरी वर्कर वहां पे नहीं है तो आपकी कंपनी नहीं है, वो भी आप सोच लीजिए।
Ji. Shantanu, let me come to you now before I get wrap-up comments from everyone. And I want to address this issue to you as a consumer and also as a founder. On the back of what you've heard on this panel today, what do you believe has to be the way forward?
2-3 things. I think one is a realistic understanding of how consumer growth is going to happen. We saw this play out in e-commerce in a different way. We saw it play out in mobility in a different way, right? We assumed that the market is for 10 to 15 crore people for mobility. It actually was smaller than that. And that's why the market did not grow commensurate to the valuation expectations. And then there were a lot of these kind of issues where you promise a certain driver salary, and then you try, when the funding runs out or when the rubber hits the road, you're not able to deliver on that at the scale at which you have promised, and then all of these things happen. So I think expectation of valuation and actual market size has to be kind of in sync. Sometimes you invest to create the market, but that cannot be an explosive one. It has to be a slower one. Because India will take time. Consumer behavior will take time. Second thing is, I genuinely believe that Indian consumers, we have to, as founders, and I think Aadit, Abhishek are kind of amongst the best out there, finding a way for Indian consumers to pay for value in convenience is probably the biggest challenge that we have. There are enough examples of Indian consumers paying premiums for great value. There are enough examples. Like the alcohol industry is full, right? If you give great value, people will pay for it. But how do we do it across service models? How do we do it across product brands? How do we do it across the board? Is something that we genuinely have to figure out. And I think as consumers, we have to start realizing. We brought furniture companies to the knees, yaar. 3-month trials for sofas. Consumers would buy 89th day return. 89th day, and I've seen good people do that, right? So it really pains me to see when consumers really bring companies to their knees and mass, so that those kind of habits should be, I think, socially looked down upon them. It just looks really, really bad. Myntra, great amount of returns. People are buying 10 shoes, returning 9. Next month again buying 10 shoes, returning 9. Good people, 5 lakh per month household income. It just does not make sense to do that. So I think everyone has to solve the problem. I don't think it's easy, but I think just kind of tying market expectations with valuation expectations is important.
Yeah, I think that's really at the heart of this as well, is to get expectation management right. And Aadit, I'll give you the final say as far as this debate is concerned. What do you believe, as a company that is in the quick commerce business, that you believe needs to be done across the board for the industry to ensure that this remains viable and sustainable? You're saying that you are, but for this industry to be viable and to grow sustainably, what do you believe are the ingredients for success?
Yeah, no, I appreciate the last word here. And I think, I'll start by saying, we have a deep amount of respect for the rest of this industry. I think we respect the competitors that we have. They're pushing us to be better operators, better, deliver better customer experience, grow faster. So we respect and we're thankful for the competition we have. And frankly speaking, even the situation we're discussing in right now of one of our competitors, I'm honestly very confident they'll be able to solve it soon. I think they've got a crack team, and I'm sure we're sort of in the fag end of that. Look, in terms of my thought process in this model, I absolutely agree with Shaik Ji that if we have to succeed in the long term, it's got to be not at the expense, but by the side of the folks that are doing real work on the ground, the delivery partners, the packers, the customer support agents. And we've, tried our best to do that. In fact, Zepto has not had a single large scale strike in its entire history, like the one that we're discussing today, predominantly because we've tried to do that. Now, that's not because we, inflate wages or try to do things that are unsustainable, but because we want to treat the people that we feel are really driving value with respect. Right. And like I mentioned, across delivery partners and backers, customer support agents, and more. And so, yeah, that's our thought process. I think that, it gets missed sometimes in, the air conditioned offices of large companies with lots of capital. But the reality is, if you really build with, a best in class, with best in class operating discipline, with high integrity and probably most importantly, obsession with customers, I think we're building like a phenomenal business that can be, I believe, much larger than people think right now. I'll leave it with one last, sort of anecdote. I think if you look at Jeff Bezos building Amazon, right, one anecdote that he has is in 2001, when he lost 97% of his market value at Amazon, most people wrote off e-commerce. But he knew, sort of looking at his data, his P&L, his customer experience metrics, that he was actually building something generational. And so the negativity around him didn't really affect where he was taking the business. And I think, our team and I'm sure other folks in this industry are feeling similarly. So yeah, we're excited, and hopefully we can do this with delivery partners by our side.
Well, the jury is out and time will tell whether this is in fact going to be a game changer, as Abhishek called it, and a generational shift, as you believe it's likely to be, Aadit. But thanks very much for joining us here on the program. I don't believe that this is going to be an easy ask of any of the stakeholders involved. This is a complex business. Shaik ji, बिल्कुल 10 सेकंड बचे, आप बताइए आपको क्या कहना है?
हाँ, मेरी रिक्वेस्ट है यहाँ पे जो भी यंगस्टर सीईओस है, मैं आप सबसे अदबन गुजारिश कर रहा हूँ, बार-बार गुजारिश हाथ जोड़ के कर रहा हूँ, डिलीवरी वर्कर्स की समझने की कोशिश करिए उनकी परेशानी को। हमें कोई स्ट्राइक करना, हमें कोई बंद करना, वो हम भी नहीं चाहते। हम लोग खुद काम करना चाहते हैं, मेहनत करना चाहते हैं, उसका सब्र का फल मिलना चाहते हैं। बस उससे बढ़ के हमारा एक्सपेक्टेशन कुछ नहीं है। हम लोग यूनियन भी इसलिए करते कि हमारे राइट्स को हम फुलफिल करें, हमारे राइट्स को हम हासिल कर सके। बस हम इससे बढ़ के हम आपसे कुछ नहीं मांग रहे। हमारा जितना खून पसीना बह रहा, उसका शरीर का दाम दे दीजिए, बस उससे बढ़ के कुछ नहीं चाहते। थैंक यू।
Thank you, Shaik ji. Thank you, Aadit. Thank you, Abhishek, Shaik Salauddin and Shantanu Deshpande for joining us here on this Young Turks conversation on the future of the quick commerce model. And as I said, the jury is out and time will tell which way this is going to go. But, we will continue to focus on this as a story, and we will continue to focus on this as a business model as well. But with that, it is time for us to wrap up this edition of Young Turks. Thanks very much for watching. Do stay tuned. The news continues on the other side.